Welcome to the Nano podcast. I'm your host, Will Chernlin, and I'm excited to have you join me on this journey through the world of nano-cap companies. For the past decade, I've talked to thousands of business owners across various industries. It's been an enlightening experience revealing the vast tapestries of entrepreneurship and innovation that thrives beneath the surface of mainstream media coverage. Each week, I will interview different leaders of nano-cap publicly traded companies to learn about their history, what they do now, and their future. As a reminder, none of this information is financial advice, and it is all for entertainment purposes only. Let's start this week's episode. Hi, everyone. This week we have Andrew Brodkey, CEO of Idaho Copper, stock ticker COPR. Idaho Copper is a critical minerals developer that is advancing a 2,640-acre CuMo flagship copper and molybdenum project in Idaho.
Thanks, Will. It's molybdenum. That's how we pronounce it.
Okay, I'll keep working on it. Looking through your background and such, you started off with like a engineering mining degree, and then quickly right after that went and got your law degree. In the very beginning, did you have any sort of family history or anything in mining, and what got you interested in mining? And then how did you already at the age of, say, like 23, know that you wanted to get into mining law? That's a very specific type of law for especially someone as young as that. Usually it's something maybe people fall into as their career as they kind of build their tools, but it seems like you were ready to do this out of the gate. So yeah, tell me a little bit about your background.
Thanks, Will, but it was my plan. I come from a family, my mom's side is engineers and my dad's side are all lawyers. And I knew that I wanted to ultimately combine the two. So the mining piece was really important to me. When I first attended the University of Arizona, coming from the Midwest, a really cold climate, I stepped off a plane in Tucson, fell in love with that area, knew that it was a big mining state. I had my sights set on being a mining engineer almost from the outset. Metallurgical engineer originally, but then switched into the mining side. And then right after graduation, I went back to the cold Midwest, Nebraska, where I was from. Went to Creighton University, got my law degree. I was able to work as an engineer, though, during my time going to law school with a company called Peter Kiewit, which is a very, very large private company. They had a mining division. I spent time at their coal projects, their coal mines in Wyoming and Montana. So ultimately, it was a melding of the two, which has really served me well. There aren't a whole lot of people that have this type of a technical background, and it really helps in this industry.
That's what I was going to kind of say, that you must be a unicorn out there, that not many people have JD and field experience at the same time. That's probably a diamond in the rough. And so, to kind of talk about through your career then, as looking through your LinkedIn, you've worked with like probably dozens of mining companies through M&A deals and just helping run them and helping them go public and reporting and all that type of stuff. Tell me about just in the last like 30 or so years about just the mining industry in general as a kind of a cyclical thing. In the beginning, it probably was exciting, and then it got to a point where any type of mining, no matter what it is evil. And then now we're back on the other side of the pendulum swing, where now mining in the U.S. is the most important thing we can do to further the future of our nation. And so kind of tell me about how the mining industry has changed over the years as it kind of goes up and down with public opinion, goes up and down with ecological concerns, with defense concerns, with just public opinion. Tell me about everything.
Well, it's funny, Will, you use the term pendulum swinging. It really is coming back to the side of the miners. It's been on the environmental side for quite some time now. And that's a result of the laws that we have. There's just such a myriad of different laws, regulations, and statutes before a mine can actually be put into not only operation, even into exploration. There's a pushback every place you go, especially if you're on federal land like our project is. But I've seen it, and I've been through the cycles that you're talking about. When I started in the business, my first job was with a mining job was with a company called Magma Copper, which was a spinoff from Newmont, one of the world's largest gold company. We were their copper division. We were spun into a really low copper price scenario. And I really thought the company at that point in time, and I was was an executive, a C-level executive, the general counsel of Magma Copper. We were a basket case, and we may not have survived except that the copper price went from about 55 cents up to the low 90s, and that saved the whole company. And then the industry cyclically came back around again, just like you're seeing. But in terms of where the whole industry has gone, my take on it is that you've got to be incredibly responsible these days to be able to survive. I mentioned these incredibly laborious statutes and regulations that govern just about everything you do. You can't put a mine in certain places. In my career, 35 years in this business, I have seen maybe 2 or 3 spots in the world where you just aren't going to be able to mine. There are glaciers in Chile, for example, that stopped one of Barrick's big projects called Pascua Lama. There are other examples like this, but generally speaking, if you can solve the environmental equation, if you can show you aren't going to degrade the environment, if you can show you're going to be responsible, sustainable miner, there's room for you in this business. And it's taken a while, I think, for our particular project to come to that conclusion, but we are. I'll get into our project later if you want to talk about it. I'm sure you will. But the overall big trends are be responsible, do your work correctly, correct old legacy problems if you can to help the environment out, even if it's not your responsibility. But just be a good citizen. Support the communities. Take the environmental communities' concerns into account in a responsible, reasonable way, and you should be able to ultimately mine your project.
Yeah, we'll get into Idaho Copper next, but just one more kind of question about in general, just the mining industry. I'm thinking about it from one of your interviews. You're talking about an updated PEA coming up and such, and I was thinking about trying to forecast. In the just like metals and materials industry, is there some sort of kind of just natural like oligopoly / cartels that kind of come out over time? Because like you're not just mining without like the government's permission, like you said. Like it's not like someone's just digging in their backyard. It's like there's lots of regulations and things you need to go through. But at the same time, if someone finds a copper deposit that's bigger than the rest of the world's supply, it's not advantageous to anyone for them just to go crazy and just flood the market with copper, right? There's a way to kind of get it out into the market so that you can at least recoup the costs of all the permits, all the legal stuff, digging the hole, everything that goes along with it. And so is there any sort of kind of like internal price controls when you're trying to figure out for say like a copper mine where you're trying to figure out, okay, like we need copper to be at X amount of dollars per pound for this to be profitable. And like the macro forecasting shows that there won't be too many new copper discoveries. This is a price that should stay stable for the next 25 years. Like how does the pricing of the materials work like that?
Well, you don't control the price. These are commodities. The market controls the prices of these commodities. All we can do is control the production and the cost of production that go into a mine. So there are different tiers. If you are, let's say, a first quartile producer, meaning your costs are in the lowest quarter of all the mines that are coming online or that are currently producing, you're going to be fine. I learned that from my early days in the copper industry. You want to be first quartile on costs, and not just production costs, but what we call AISC, which is all in sustaining costs. Those numbers change every year. With inflation, everything becomes more expensive. So the capital equipment, the fuels, the consumables, your mine plan and your ability to make a profit changes on a monthly, if not a yearly basis. So yeah, you do not control the commodities. All you can control is what technically your mine's allowing you to produce. You also mentioned something that's important. There's not enough copper in the world today to satisfy our demand. The analysts you speak to, depending upon who you actually approach, there's no real consensus, but I think the average year-on-year growth rate in the copper demand side is between 2.5% and 3.5%, and that largely comes from China. They're the largest consumer. 60% of the new fine copper in the world is consumed by them. But we don't have enough in the pipeline. There just aren't enough projects out there. There are mergers going on. There are M&A activity. There's some new projects that are being developed and found, but it's getting harder and harder. The so-called low-hanging fruit isn't around anymore. So new techniques are being developed to try to find new mines. Our project has been around for a while. It'll help certainly on the domestic side, both in copper, molybdenum. By the way, we have three other metals of importance. We have silver, rhenium, and tungsten. And just about everything I just mentioned is incredibly important to our government, particularly the Department of Defense. It uses those, what we call critical materials and critical metals in a ton of defense applications. But back to your original question, we don't control the market. All we can do is find a mine that technically meets the specs that we're after and is going to be profitable and is going to do so at the lowest cost possible.
Quick, dumb follow-up question. Do we process copper in the U.S. or do we send it to like Canada and they process it and send it back?
Both. So we don't have enough smelters in the U.S. When I started in the business, there were about 10 smelters back in the 1980s. Now we're down to like 2 or 3 that are actually active that have permits. So what you make, different types of copper makes different types of, I'm going to stick with copper here, makes different types of products. So if you have an oxide copper ore body or a leachable copper ore body, you can make the copper cathodes here. You can actually mine them, leach them, process them, and produce saleable copper cathode. And you don't have to send that anywhere. If you produce from a sulfide copper deposit, although there are innovations coming that are allowing sulfide copper resources to be leached, but if you typically conventionally process sulfide copper, you mine it, you have to put it into a mill, a concentrator, you make what's called a copper concentrate, and that concentrate then has to go to a smelter, generally speaking. We don't, as I mentioned, have enough smelting capacity here in the U.S., so it has to go offshore. So here's the irony is you ship that copper concentrate offshore, it goes to Korea, Japan, or China, and then the refined copper gets sent back here. It'd be a lot easier if we could build new smelters here and satisfy our copper demand for refined copper here in the U.S. And there's some work happening at the federal level to potentially tweak with the Clean Air Act to allow new smelters to be built. Don't know if that'll ever happen. I think it's necessary, but I can't give you an update as to actually what's happening today.
Yeah, a quick reminder of just how important you are to someone like the DoD is I was just in vacation in Italy and going around these different churches that have had their brass moldings and copper moldings melted down and taken over time because they needed it for war. And it's just when you need the materials, you need the materials. So we're getting to a hot category for you. So with Idaho Copper, you have had experience, like I said, looking at the financials of dozens and dozens of mining companies over the years. And then you also have the technical expertise of knowing exactly kind of what kind of veins are in the rocks and how easy it is to get out and this and that. So with all your pattern matching skills, everything you knew, what got you excited about this specific company over all the other choices you could be working at?
I was recruited by the current CFO who had a long history with this particular project, the CuMo project. That's CU for copper, MO for moly. Don't forget we have the other metals as well, the silver, the tungsten, and the rhenium. But what excited me when I first took a look at this was the size of the project, its location, the work that had been done, tons of drilling already advancing the project, and the idea that with some help, this project could really be made to I'll use the word hum. So when I first got introduced to the project, I inherited a document that was a 2020 preliminary economic assessment that it was authored by SRK Canada. And the result of that document was sort of a middling, less than 10% IRR, requiring 150,000 ton a day mill, $3.1 billion of initial capital, and the NPV at an 8% discount was $350 million. Not a whole lot there to excite people. But what really got me, I think, attuned to the project was looking at some of the geology and some of the ability to make those numbers actually improve dramatically. I'll talk a little bit about the geology. So we're in a district that is historically mined for gold. This deposit, the copper moly deposit, was actually discovered in the late 1960s, originally by Amax, which was a New York company at the time. Others, larger companies and smaller companies, sort of came and went, but our predecessor was a company called Mosquito Consolidated Gold Mines, a Canadian company that in the 90s started a drilling campaign. And a lot of drilling was done between probably the mid-90s. Last real campaign was ended in 2012. Tons of good information came through. This is what we would call a copper molybdenum porphyry. That's a classification that indicates a intrusive but somewhat evenly disseminated ore body. In a typical porphyry, the mineralization you find is somewhat consistent throughout. But we have a special type of porphyry that's called a stockwork. So instead of seeing all the mineralization consistent, we have very thin veins carrying roughly 95% of the metals that we're interested in. So picture the room you're in right now, a fairly large room, and you have stringers going through the room, maybe 5 or 6, a couple centimeters thick, and those carry all the metals. So the key to making this project work and making a lot better result than the 2020 PEA was to separate. How do we separate these thin veins from all this other material that we don't want, that's not carrying much of anything of value? And the key to do that is a technique called ore sorting. Ore sorting has been around for years. It's become, I think, a lot more efficient over time. In 2024, we engaged with a group called MineSense out of Vancouver, BC. They have ore sorting installations with many of the majors throughout the world at different mines. And by the way, ore sorting, again, not innovative in the sense that it's something that's trial or pilot plant. It's something that's been around for 40 years, and it's probably one form or another of ore sorting's in place at probably 100 mines worldwide. What we did was we sent our samples up to Vancouver, and they came back. Your ore is amenable to sorting. At the level of the shovel bucket, as materials blasted and drops in, you can tell what the grade is, and on belts too. The same type of sensors. They're called XRF, X-ray fluorescence sensors. And knowing that we can use ore sorting allows us to separate higher grade material from lower grade and waste. And that allows us to move into a situation where, to make the much better result than the 2020 PEA, we can build a much smaller mill. We can bring the capital down substantially, and the economic results are going to fly off the page.
So, yeah, when the CFO brought it to you real quick, did they come to you saying, hey, this 2020 numbers are pretty good, but if they did ore sorting, it'd be crazy. We should look into this. Or did you look at the 2020 numbers and go, man, you guys aren't even ore sorting? That's not even a new technology. You could get so much more yield out of this. Or kind of, when did that light bulb happen?
Well, I'm not going to take credit for the invention of ore sorting as it relates to this project. One of our stronger technical advisors out of Canada, a geologist and a geoengineer that had been involved in the project for many years, had advocated for ore sorting. And there were some very preliminary ore sorting numbers that were interjected into the 2020 document. But we became serious about it in 2024. That's why we did all the prep work, and that's why we were able to prove that our ore body, the CuMo ore body, is absolutely amenable to separation through ore sorting. And what it allows you to do, Will, is to take a 150,000 ton a day mill and instead put in a 30 to 35,000 ton a day mill, and allows you to bring the capital down from $3.1 billion. Our target's like a little over $1 billion. So you can see where that's going to have an incredibly positive effect on the economics.
And so when you're starting to mine, is there a specific hierarchy of like, hey, we know there's always going to be a copper customer, and it's the most plentiful, so let's sort that out first, then let's deal with the magnesium? Or is it all in conjunction together? Or how do you kind of like separate the mines and choose like which one to focus on? Or do they all get equally their own focus?
Oh, the metals are present in these thin veins I talked about in a matrix where, as you mine and process, you're going to recover everything. We'll make two different types of concentrates. I mentioned copper concentrate earlier. We'll have a circuit for copper inside of the mill. The silver will go with the copper, and that'll be a copper-silver concentrate. The molybdenum will pick up the rhenium, and that will be a separate circuit inside the concentrator, and that will produce a moly rhenium concentrate. The tungsten will come out separately through its own circuit, and we'll have a tungsten concentrate. So we'll be actually producing simultaneously three types of metal concentrates, but you don't selectively say, well, I want this one and not this one. They all come out at the same time.
So with molybdenum, tell me more about that, because it's obviously something that I haven't really heard about until I started doing research. But it looks like you all are trying to do some sort of push to try to get it into the kind of strategic resources of the United States classification. So tell me a little bit more about that material and the use cases and why it's kind of special that you guys have that too inside your mind.
It's a really important metal, and it is used in many different applications, but principally it helps to alloy steel, to give steel a higher tensile strength and corrosion resistance. So it's used a lot in pipeline work, like oil pipelines with caustic and or acidic solutions going through the pipelines. It's used in seawater type of desalification plants, where you produce drinking water from salt water, and very corrosive. Salt water is very corrosive. So you need really, really high strength and high quality steel. So moly by itself, you wouldn't really recognize it as, it's not as like a household word like copper or like iron, but it is very important when it comes to making the types of products that we need for infrastructure and for the types of applications that I've just mentioned. And it's growing, by the way. The moly market is growing in a very similar way to the copper market that I mentioned before, 2.5–3.5% year on year on the demand side. So we're hitting the market, I think, at the right time with this project, that with all the metals that we have, there's a big demand for everything that the CuMo project currently has.
As this becomes kind of a bigger and bigger thing in this kind of current administration of allowing businesses to do business, encouraging business to be done back home, how much is a kind of lit a fire under you and your management team's butt for the next 3 or so years that this may be the best window ever to try to get as much work done as possible?
Everybody has called this the perfect storm. We need the materials here. The mantra of this administration is find it here, mine it here, process it here, use it here. You couldn't find a better set of circumstances under which to operate. That leads us to the ability, which we are taking advantage of, to apply for federal funding for the project. You mentioned earlier, and we haven't gotten into it in huge discussion yet, but everything I'm talking about, all the work on the ore sorting and other tweaks to our 2020 document are going to result in the publication by the end of this year, or maybe slipping a little bit into Q1 2026, of an updated preliminary economic assessment. Again, the numbers economically are going to be far better than what you saw in 2020. What that means is that the next stage after our PEA is to go into a preliminary feasibility study, which we call a PFS. Part of the PFS will include drilling. Part of the PFS will include a lot of different test work on a number of different topics. We're looking at potential a hydrogen hub for power. We're looking at doing some more work on the efficiency of ore sorting. We're looking at some acid rock drainage studies. There's a list of 6 or 7 items that'll be inside of our PFS. The cost of the PFS is roughly today estimated to be about $40 million. The availability of federal money to offset all or part of that is just out there today. It's available. We are currently working on a white paper to submit to the Department of Defense and a number of their sub-agency departments that are in charge of funding for projects like ours. Also the Department of Energy. There are federally related banks like Exim Bank that are actually funding onshore projects. And we've seen a lot of companies very similar to ours and even located in Idaho that are receiving federal money for their projects, even at the stages beyond and before and beyond where we're at. We're at what I would call CuMo is a is an advanced exploration / development stage project. And we've seen many federal grants come down that are funding projects that are very similar to ours, like I mentioned before.
So as I wrap up here, I got a couple more questions for you. One is just like, how does the supply chain work, and like, who is your customers? Do you all send the material off to a smelter, and then they charge you a fee, and then you sell it to an end customer or factory, or do you just sell it to the smelter and then they handle it from there? Or how do you get paid?
Again, it depends on what type of product you have. If you make your own oxide copper cathodes, you can have a direct relationship with a consumer of those cathodes, a rod mill, a wire manufacturer here domestically. That's what we would do with our cathodes. Our copper concentrates and our molybdenum concentrates would likely be sold. So the copper concentrates could be sold to a smelter overseas, and we wouldn't see them anymore. They would just go away. There are arrangements called tolling arrangements where you can actually pay the smelter to process your material and give you back your metal. And I've seen it done. I've been involved in it both ways, but it's cleaner and simpler just to sell the concentrates. Same thing with the moly concentrates. They don't go to a smelter. They go to a roaster, which is another pyrometallurgical facility that essentially burns off the sulfur and gives you back metal. But either way, you have your choice. You can toll, get your metal back, or you can just sell the concentrates to an end smelter.
And then as I'm thinking about geopolitical stuff and trade shocks and such, is there any way to like rapidly ramp up production in a mine if, say, tomorrow the president says we need 10 times as much copper as we currently have? Is there any way to actually ramp it up, or is that like a 2-year thing to like get the machines in there, ramp it up? Or do you say, hey, this hole is only so big, we can only fit so many machines in, we're working at the fastest speed we can?
I'd like to go as quickly as we can, but there are limitations. You have to do your technical work. You've got to do your planning, your mine scheduling. You have to select your equipment. You have to design your pit. You have to design our facilities. We're in the middle of the first the first stage of that. So it would be a mistake to go wild, even if you could. But we can't, largely because of what we call NGO interference lawsuits. There's a lawsuit that currently is stopping our drilling. We haven't been able to drill for going on 14 years now, largely because the environmental groups file lawsuits to stop you. This is part of unfortunately, the cost of doing business in the U.S. You have environmental groups that just don't like your project for whatever reason, and they are able to, without much oversight, just file a lawsuit to stop you. Not our project only, but every other major project in the U.S. on federal land sees the same sort of result. So, yeah, I would love to be able to go quickly, but you have to take reality into account.
No, it's tough. It's tough when there's a free market, but then the free market has different rules in different places.
But things are changing. Things are changing. There's a couple bills that people should be aware of that are going through both the U.S. Senate and the U.S. House that would start to limit the ability of environmental groups to file what the House version calls frivolous lawsuits. And would also give some oversight to the courts so that decisions inside of a court couldn't just lag for years and years and years. Those sorts of things would really help our industry because investors want to know, when are you going to be in production? And today I can give them what I think would be the best scenario, but because of lawsuits and because of interference on mostly the legal side, not the regulatory side, the legal side, I can't give them all the certainty that they want.
So, to kind of on a more positive note, what do you see the next 5 years look like as we wrap up here? What kind of gets you excited? What gets you out of bed for this?
It's a great project. I haven't mentioned at the first discussion we talked a little bit about what got me interested. The size of the project, it's huge. It has a gigantic mine life if you wanted to mine everything. In terms of what we've identified already as measured and indicated and inferred resources, which aren't the highest level of confidence. The highest level we call reserves. We're not there yet. We'll get there. But just in terms of what we call M&I and inferred resources, we've got 8 billion pounds of copper, 3.5 billion pounds of molybdenum, 400 million ounces of silver, plus the tungsten, plus the rhenium. So it's a giant multi-metals project. And the size of it just, gets me going because it's similar to the types of projects I used to work with at the majors that I was involved with. I worked for both Magma Copper, I mentioned, and then Magma was bought by BHP, the world's largest mining company, in the late 90s, and I stayed with them for a number of years afterwards. And we had giant projects. This is a giant project. And that's what gets me up and going in the morning, frankly. That being able to work on a really good project in a really good location, a great jurisdiction, having everything when you start checking the boxes, you want to make sure you've got water, which we do, power, which we do, workforce, which is very close by. We're 35 miles from the capital of Idaho, Boise, and with easy access. So when you take all those factors together and you look at it objectively, it's a great project. And I'm just very fortunate to be involved with it.
Well, Andrew, thank you so much for coming on the podcast. People want to learn a little bit more about Idaho Copper and the CuMo mine. Where should I send my audience?
Go to www.idaho-copper.com. You can take a look at our corporate website, look at our presentation. One thing I haven't mentioned, which just briefly I'll talk about, is that we are in the process of moving from the OTC exchange, where our symbol is COPR, up to the New York Stock Exchange Amex, which is a much better securities exchange. And we're doing a concurrent financing, and all that's been announced. We have the Wall Street Bank helping us. That's all happening as I speak. So if people are interested and would like to learn more about the project and the company and even potentially invest, I think you're going to see a lot more happening on the corporate and security side in the coming months before the end of this year.
Thank you. Yeah, no, the one thing I forgot in my notes I have right here is just the word uplisting. So I apologize for not covering that. For those of you still listening, please remember to subscribe and review. Thanks.
This podcast is for informational purposes only and does not provide financial, legal, or any other advice. The information is not investment advice or any offer to buy or sell any securities or to make any investment. The views expressed by the guests are their own, and any reference to third-party products, services, or information does not constitute an endorsement, therefore, by NanoCap Podcast or its affiliates. The NanoCap Podcast express